Hello guys, good morning from here. How you guys doing? I hope you guys are doing well and your trades are going well. So today I won't be looking at the chart or talking about analysis. Today I am going to talk about or touch on areas. There's an area that has been confusing lots of people, and I have someone from my Facebook page that asked me this question, and this is the answer I gave to him, and we like to share it with you guys also on my channel. All right, so the topic today is understanding your stop loss and your take profit, because I always have these ideas of people, or basically the beginners asking this question of your stop loss belonging to the broker, right? And most people say yes, that is the broker that eats your stop loss and stuff like that. But with time that I have spent with financial markets, I've come to realize with the time of study I've put into finance, I get to understand that actually your stop loss does not belong to the broker. All right, they don't make money from your stop loss. All right, and also, then what about your take profit? If actually they make money from your stop loss, you don't even pay attention. How about your take profit? Does that mean that they also make profit from your take profit? Why are you so focused on your stop losses? Right, so the idea is that the broker make money from their commissions and also from the spread. All right, the ask and the bid. So that is by the way. Now I want you guys to understand your stop loss and your take profit the same way you invest in Bitcoin, the same way you invest in crypto, the same way you invest in companies, the same way you buy shares from companies. All right, now we are going to go through that step by step, trying to understand what it's all about. And I am going to show you guys something about investment, and then we will go to our chart and analyze that in the case of stop loss and your take profit, right? So now we start off with this. If a share or an asset is worth $20, all right? So now at that particular time of the day, you go to your chart, you go to your broker, you open your app where you purchase your assets, and then you notice that there's a particular asset that's very cheap, that is worth $20, and you feel like buying that particular share, you feel like investing in that asset. So you bought 5 shares, and the 5 shares you bought is worth $100 because one share is worth $20. So times 5, that is $100. 5 shares is worth $100. So that means you invested $100 into the asset, right? Now the share now rose to $50. So that means one share of that particular asset of the company is now worth $50. So that means your 5 shares in which you bought will be worth $250. All right, so you made an extra profit of $150. All right, because the $100 right there is actually your investment, so the profit return is a $150, right? So then you sell of the 5 shares with the profit of your capital, which is $100, and profit return of $150. So you made an extra profit on top of the $100 you invested, and the profit you made is worth $150. All right, so the total of it, your profit plus your capital, is now $250. All right, it is now worth $250. Remember, on the lecture of cash flow and risk management, we talk about this profit targets and stuff like that. So just by the way, now what if the share or the asset drops and is now worth $10? So that means your 5 shares, you bought 5 shares, one share is now worth $10, you bought 5 shares, and that 5 share is now worth $50. All right, so you notice that you are on a drawdown and you have lost $50 from your $100 investment. So you decide to sell off your 5 shares, right? So you are selling up with a loss. All right, you lost $50 and you are going with $50. You're selling your 5 shares at $50. Remember, you bought it at $100 when it was worth $20. You bought with $100 when it was worth $20. You hold, and then price went below the price level in which you bought that asset. Now you decide to sell it off, and that is now you're selling at $50 because that is what your 5 shares is now worth at. Alright, so that is a brief explanation of investment in a particular asset. Now when it comes to forex trading, use that same principle, that same idea I just explained right here, to fix it into what your stop loss, your take profits, and your break even means. Okay, so in the forex market, you are trading two currencies. You are buying and you are selling. You are a trader. That is what you are. It's the same way a trader in the market buys goods and services. Alright, the buyer and the seller is the same way it is on the forex market. It is just digitalized. You are trading two pairs. You are buying, alright, you are selling to buy an asset. Alright, let us say you go to the market to buy, let's just say you buy a touch lamp, right? To buy a touch lamp, and the touch lamp, the seller is offering it to you at $10, right? So you are giving him your $10 in exchange of your touch lamp. All right, so you're selling your dollar, you're selling your $10, so you could get the touch lamp. All right, now if you are a wholesaler and you're buying from the manufacturer, right? Now that goods you bought worth $10, you exchange it with your money to purchase that goods. Now you're going to sell to the consumer or a retailer. Let's say the retailer is to the consumer. You are selling with an extra profit, right? So that is by the way. Now when it comes to the currency market, you talk about the forex market, the foreign exchange market. You are exchanging two currencies, and right here I want you to pay attention to the asset, all right, the pair, and also the price level right here by my right. Okay, now let's now go deep into what the stop loss, the take profit, and everything about the forex trading is all about. Now you have two orders. You have the buy, right? You have the sell orders right here. You have the buy orders right here, and then you have the spread, which is the ask and bid. That is what it is. The bid is the buy, the ask is the sell. Okay, that is by the way. And then you have an area in which we have this right here, and we call this your bank account. Now the reason I use this word, your bank account, is kind of like saying this is your broker, and you know you deposit funds inside here. So as long as it holds your fund, it is a bank. All right, let us put it that way. It is your bank. You deposited money into your trading account, isn't it? It is your trading account. So it is your account, your bank account, just like that. You are putting funds inside here, right? So let's just say you deposited $100, right? You deposited $100. So your account is now holding $100 amount right there in your account. So now we have settled the buy and sell orders. We talked about the assets in which you are trading, in which you are doing the exchange. We talk about the price in which the asset is worth to get the other one. You talk about your bank account, all right? You talk about your funded account, okay? And then we get to talk about well, again, what else? All right, we talk about the commissions that the bank will get. All right, so now, and also, yeah, we get to talk about your lot size. Okay, we get to talk about the lot size and your leverage. All right, so we are going to put lot size to understand it in another aspect. All right, so you to easily understand that lot size and then your leverage. But I will not be talking about leverage because you already know what leverage means. Leverage is the funds in which the broker add to your orders. Like it's just like they are lending you some part of their money so you to be able to open a position. For example, if you experience that when you found $10 in your trading account and you use a lot size of 1:10, sorry, you use a leverage of 1:10, you will notice that you cannot be able to open orders, right? But then if you use the leverage of 1:1000, you can be able to open orders using a $10 account. So that is what leverage is all about. Now the lot size, we are going to understand the lot size in this way when it comes to investment, the way you buy assets, the way you buy shares. Now the lot size is the quantity that you want to buy. All right, is the quantity of shares that you want to buy. That is what the lot size is all about. You have 1 lot, 10 lot. You know how many lot size you actually want to buy. So I don't get to know that much what this lot size is equivalent to in price. You know, just like when we have $100 in our account, our investment account, and we decide to invest $50. All right, that is very, very understandable. The lot size you're opening, or lot size in your forex trading account. So we get to understand lot size as the amount you're willing to buy, the quantity of the asset that you want to trade. All right, either you want to sell or you want to buy. All right, so in this case, let's look at GBP, JPY. So remember, these are two assets that you are trading, right? These are two assets that you are trading. So we are deleting all of this stuff right here. All right. So let us say that you opened your chart right now and you notice that GBP, that 1 GBP, all right, the price of 1 GBP to JPY is 180. All right, 1 GBP is equivalent to 180 JPY. You can actually see it labeled right here on your trading view. 1 GBP is equals to 180 Japanese yen. All right, so now when you place a buy order at this price level, it means that you are buying GBP and you're selling JPY, because you notice that this chart right here is the chart of GBP. All right, this chart is the chart of GBP against JPY. So the chart printed for you is what GBP is equivalent to in JPY. All right, so when you place a buy, it means that you are buying GBP, all right, and you are selling JPY. Okay, that is what it is right there on your chart. All right, so if you buy 1 GBP right here and you're selling JPY, someone that has what is it called, Japanese yen, is selling his yen to buy GBP because he noticed that GBP is now stronger than JPY. So right now GBP is now what the current price of 1 GBP is now 181 Japanese yen. All right, so now you put a certain lot size you want to buy, which is the quantity that you want to buy. Now let us say that the lot size you opened is equivalent to $10. All right, so you bought, like, okay, let us say you use 1 lot size, and if that 1 lot size is equivalent to $180, all right, so the 1 lot size you opened right here, the amount you invested right here. Now let us say you bought 1 of the Japanese yen. So you bought 1 of the British pounds. and now it is going bullish, right? So that means your investment, you sold your JPY to buy one of GPP, all right, to buy one shares of GPP, and your investment is giving you a profit right there, right? So now it happens to be that it is now worth $181, right? So it's not that much. From here to here, you made like $1 profit, right? So now you decide to sell off your profit right here. Okay, that is your take profit. You're selling off your GBP so that you can take your profit and add it to your account. So your 180 is now worth 181. You made a profit of $1.680. All right, you bought one of GBP and you're selling where you made $1 profit. Okay, so you selling at this point is you taking profit. You're selling off your GBP so that you can run away with your profit, so that you can hold your profit. Okay, so that right there is referred to as an area of you taking profit. That is your take profit. Okay, now what if you bought at the price of $180? Okay, what if you bought at the price of $180 and then you decide that if the price goes below 180 and possibly end at this point right here, and you place a stop loss right here, right? So what that stop loss means is that when you buy this asset, right, you made the profit and then you are still holding your assets, you're still holding your shares, and it happens to be that price now trades below the price level in which you bought that particular asset, in which you bought GBP. All right, now your account is now in loss. All right, now what stop loss means is that when price gets to this $179 that you want to sell off your JPY, all right, because you're selling off in loss. All right, that is what stop loss means. It means, please sell off my assets, please broker, sell off my shares when price gets to 179 Japanese yen. I am willing to take a one Japanese yen loss. That's what it means. So you are selling off your shares, the amount of shares that you bought, in loss. That is what stop loss means. It does not belong to your broker. Your broker does not eat your stop loss. All right, that is your investment. That is what the asset in which you bought is worth at, and it is worth below the price level in which you bought it. And you're selling off below the price level in which you bought it so that you won't have a massive loss. That is the amount of price that you're willing to sell off, so you won't have too many loss. That is the reason why you need to trade with a stop loss. You're selling off your shares because it is now below the price level in which you bought your shares. That is what stop loss means, and that is what take profit means. I've explained take profit. Now, talking about break even. Break even is you bought an asset. Normally, price is fractal. Price always fluctuates. So price goes up to this point. You're still holding your asset. You're still holding your Bitcoin, right? And then price starts to get lower. Now you start to watch your price, and you feel like the price that the price is wanted to go below the price level in which you bought it, and you don't want that. So you want to sell your assets off when it is now worth 181.205. So you are leaving with a profit also, but then not the target that you wanted to properly sell off your profit, the shares. So you're willing to sell it at this price level and you're selling it so that you would sell it below the price level in which you bought it. You're selling it maybe half of the price, right? 1/4, 1/3, and you sell it off. That is what break even is all about. Break even is profitable. Take profit is profitable. Stop loss is you're selling at a loss. That is what it means. Now, when you place a sell order right here, all right, let us say you open your chart and you sold, you place the sell right here. So the sell you place, it means that you are selling GBP to buy JPY. All right, so someone that has the British pounds is selling off his currency and use his currency to buy JPY. All right, so that means when JPY starts to decline, the person is making profit because he invested his own currency into another currency that is stronger, which is the Japanese yen. He sold his British pounds to purchase Japanese yen. So he is in profit because he bought Japanese yen. When you click a sell on your trading view or your MT5, your MT4, you are buying JPY, so you're making profit. Now, the same thing I explained when you click a buy right here, and you bought Japanese yen, some particular shares, and that is based on the lot size. Now, when price starts to sell, right? This 181 is what the Japanese yen is worth in British pounds. So that means the British pounds is declining against the Japanese yen, so it is weak. You're buying the Japanese yen. All right, you're buying this Japanese yen. So when price gets here, this, let's say you want to take a profit right here, this little movement, you're now running with your profit right here. Okay, you run away with your profit right here, and when price gets above right here, you're selling off right there with a loss. The same thing I explained at this point is the vice versa for that. Now, talking about your trading account, you funded $100. Let's just say that when you place the buy right here, remember you set your broker to set your fund to be equivalent to dollar, to be in dollar. So when you place a buy or a sell, that means your dollar is being converted to the equivalent of GBP, so that you can sell GBP and then buy JPY. Okay, so even though also you are not trading, you are still making a little bit of investment, like you're still making a little bit of profit when your account is right here. You're making a little bit of profit. And what do I mean by that? For those of us in Nigeria, you know that in the black markets, $1 is now equivalent to 1,000 naira. All right, $1 is now equals to 1,000 naira, right? So those that use the right broker, you know that we fund with trading agent, and the funding agent, the deposit agent, they charge us at black market rate. Okay, they charge us a black market rate. So we're funding and we're depositing with black market rate. So even if you are not trading, you are still investing, as long as your funds is in that your trading account. you're still making profit and you're still making loss. Now, what do I mean? If you funded your account, when $1 is equals to 500 naira, all right, you would have made double. You have made double of your funding when $1 is equals to 1,000 naira. So that means if you funded, let's just say you funded $10, $10 when $1 is equals to, when $1 is equals to 500 naira. Right? If your $1 is equals to 500 naira, if you funded $10 when $1 is equal to 500 naira, then your account will be $10 is equals to what? 5,000 naira, right? So that is 5,000 naira, right? So if you check closely, you will get to notice that currently $1 is equals to 1,000 naira. Then that means that your $10 deposit, so that means that your $10 deposit is equals to 10,000 naira. So you see that you are still making money. Like you are investing, you are actually an investor. Even like when you fund your deposit into your trading account, you are actually making money when the dollar is actually rising. All right, because right now, if you fund that $10 when it was 500 naira back then, and then you left your trading account that way, and dollar gets to rise and it now becomes 1,000 naira. That means that $10,000 you deposited that was worth 5,000 naira is now worth 1,000 naira without you trading. So what did you do? What you actually did was that you invested. You are an investor, you are a trader, but you start opening orders. You're not trading because you're buying and selling. You're not a trader. But if that fund is stuck in your trading account, that means you are an investor. All right. And also remember that if the $1 starts decline, so will it be equivalent to the declination of your country's currency. So, providing financial education is what Demetrons is doing. And I'm sure that I have impacted a lot of knowledge to you guys. And I hope that I've cleared your mind when it comes to understanding what stop loss is all about, understanding what take profit is all about, and understanding what break even is all about, and what investing is and what trading is all about. So you guys should stop laughing at someone when price hits their stop loss. All right, they just have a loss on their investment. You, a trader, you are also an investor. But the difference between trading and investment is that you're trading with leverage, so you're making more profit. You're making fast money than someone who buys and hold without leverage. Because when you're investing without any leverage. All right, your money is being equivalent to the price level and dependent on the number of shares that you bought, the amount of shares that you bought. So that is the two difference between trading and investing. So that is why most of us are better off trading than buying and holding, because when you're trading, you're making profits when you trade for sales, and you're making profits when you trade for buys. Okay, so this is just a short video, and also my course, like I always say, is now available on Udemy, and it's very cheap, not too much, doesn't cost much, and right there you get to see a teaching on liquidity, smart money concept, teaching on liquidity. We talk about market structure. Is very important. My market structure teachings is quite different from every market structure you have come across. All right, and you get to understand what stop hunt is, liquidity is all about. You talk about other blocks, and the important thing, quasi-model, significant support and resistance. This right here is used in Confluence to understanding areas where you get to find your order block. And then the multiplier thing is algorithm. The algorithm is what the reverse price of the market. It's what is responsible for printing and printing your candlesticks in your chart and delivery price to areas where we're having liquidity pools and areas where you're having sell side imbalance, the buy side imbalance, and taking orders from buy side and taking orders for sell side, delivering from both sides and trying to make an equilibrium between supply and demand. It's not about having the knowledge, it's about having experience after acquiring the knowledge that you need. So we recommend you guys to purchase the course, and there's 2 more courses coming up. We still get to talk about the stock market and the crypto market and all the financial education and financial services that we offer. And till then, see you guys next time. Be safe.